can see time is around 7. Let's look into today Nifty 50 as well as Bank Nifty trade analysis. And we would also discuss Hero Zero trade in Sensex, which I have taken. And let's first look into Bank Nifty, guys. You can see the market actually gapped up. And yesterday also the market showed some kind of bullish momentum. And the market faced some cut off rejection here, broke this mid of the first candles and even the VWAP towards the downside, and took support from this 921 moving average and faced rejection from this VWAP level as well as the mid of the first candle here, and again continued further towards the downside. But in case if this momentum would have broken this low or even this low, there is high chance the market would have continued further selling towards the downside. But here you can see that the market here retraced here uh, VWAP level and continued further towards the downside. So in case if you want to draw the fib extension levels, the confounded in this to the confounded in this to the confounded in this, you can see the market came all the way to 100% level here. So this is the 100% move. So in case if you want to have taken short position, you could have kept your stop loss just above that candle and targeted all the way to 100% move. You could have exited because there is 200 moving average support here as well as the pivot levels. So it was difficult for the market to break. And even you can see price taking support from yesterday's close level here. So this is yesterday's close. This is yesterday's close, guys. As this is a bearish candle, you can see the price taking support from yesterday's close. It couldn't even close below this level. And after during this moment only, you can see the price formed a bullish engulfing pattern. So in case if you try to plot the mid of this candle, you could have entered a long position, keeping your stop loss just below that candle itself. So taking long position here, keeping your stop loss just below that candle. That's how you could have entered. And for target, you could have targeted all the way to this high, guys. But here you can see the market didn't reach that high, but you could have targeted this high. Or in case if you try to plot the retracement of this level, the confounded in this to the confounded in this, you could have targeted the 1.68 level. You can see how the market came all the way to 1.68 level. Whenever there is no clear order block formation, or in case if you want to find retracement, guys, you can use this the last down move to target. Sometimes the market might reach all the way to 100%, or sometimes it might reach to 1.68 level here. And you can see how the market clearly came all the way to 1.68 level. This is the 100% move. This is the 1.68 level move. And you can see here, guys, what happened here is that the market, in case if you consider this swing to this Y, which actually broke structure towards the upside, you can consider the last down move to the last up move. So you can see market taking support from this 0.38 level over here. Or if you consider the whole swing, you can consider this to be the 550 level over here. So you can consider this zone as to be a strong support as well as the VWAP support over here. And this is the 0.38 level for this retracement, guys, I'm telling. So the market, after taking support from this 0.38 level as well as the 20-year moving average, as well as you can see the VWAP support over here, in case if the market sentiment would have been bullish, no, guys, the market would have easily broken this high, and the market would have behaved like this, consolidated and clearly broke like this, guys. This is how the market sentiment would have behaved in case if the market would have behaved bullishly. It could have even broke this high as well, guys. You can see here, this high could have easily been broken towards the upside. But here you can see the market faced rejection at 1.68 level of this retracement and couldn't continue further towards the buy side. And you can see the market clearly came here and again took support from this level and continued further buying towards the upside. You can see the market clearly even broke this high as well, forming a chalk over here. You can see this is a chalk, guys, here. A chalk over here with a fair value gap over here. So the market clearly took support from this fair value gap and continued further again towards the buy side. But you can see the market couldn't make a higher high also. And it for another candle which clearly broke towards the downside. This is a bearish engulfing candle, guys. This is where I got actually trapped. So after taking this trade, guys, I have taken this trade at around this position, and I exited at this, and I have took another trade here, guys. Another trade which I have taken is I thought of keeping after this kind of rejection candle. I kept my stop loss just below this candle itself, guys, in case if the order block, and I targeted this high so that the market would go and break this high. So you can say this kind of consolidation which clearly shows some kind of trendline liquidity which has been broken towards the upside. In case if the market sentiment would have been bullish, no guys, the market would have easily, after this consolidation also, could have been broken. But what happened is that the same pattern which has repeated here, the market came, broke towards the upside, but couldn't make an higher high and continued further selling towards the downside. The same pattern has repeated here also. The market came, took support from this VWAP level, and the market broke this high as well with a fair value gap, clearly indicating some sort of bullishness. And you can see this fair value gap has been mitigated with this candle over here. You can see the market came, took this supply, took this demand over here, and in case if the market sentiment would have been further bullish, the market came here support and continued like this, guys. This is how the market would have behaved. But you can see after this candle itself, the if a bearish engulfing pattern found here, which clearly indicates bearishness, guys. So this is a bearish engulfing candle. So this is a trap, guys, for buyers who might have entered the market. So you could have exited your trade as soon as you see this kind of candle forming. Candlestick psychology is very important. So you could have exited with a stop loss of a few points, and you could have targeted all the way to this swing as well. This low, you can see the market clearly broke and continued all the way towards the downside. In case if you want to find the extent retracement levels, you could have considered this swing, guys, the common point between this to the common point between this, you could have considered all the way to 3.68 level. You can see the market came all the way, or you could have considered till 2.68 level, or you can see as long as the market is trading below the 9 moving average, you could have considered, and you can see how here only the market tried to break above the 9, the 21 moving average. You could have exited somewhere here, but you can see, guys, after this type of consolidation, the market clearly broke towards the downside, and you could have drawn the fib levels from here to here. In case if the market crosses these levels, you could have exited. So after this candle, you can see the market clearly breaking towards the upside. You could have exited your long position. So you could have targeted all the way to 3.68 level, guys. Look at this. You might think that, okay, if the market might take support over here, but look at this price action, guys. As I have told you, if after this kind of consolidation, the market made a chalk formation, retraced back and took support from here and continued further. You can see this rejection candles, guys, here from price rejecting from 9 as well as 21 moving average, clearly indicating a very bullish momentum, guys. So in case if the market sentiment would have been really bullish, from here the market would have basically gone all the way towards the upside. But you can see this is just a trap for all those buyers who might have entered. A lot of buyers might have also entered. You can see after this candle, you could have just sold your positions, guys, with a minor stop loss. But uh, you can see the market here trapped all those buyers over here, and it came all the way and even towards the 3.68 level. With this kind of huge momentum, you can expect further selling towards the downside. So you can see the price came all the way to uh, 3.6, and you can see this is an order block level as well. So if you consider the high to this common point to this common point over here, so this is the common point. The market came almost to this 50 level, guys. You can see this fair value gap over here. You can consider this fair value gap over here, or you can consider this 0.38 level. This is the 0.38 level, or in case if you try to plot the anchor VWAP level, guys, the high of this candle, or you can consider this high, but this high, actually you should consider this high, guys. You can see this rejection of this price, or in case if you consider this one, if you can see if any rejection of candle. Okay, let's keep it this, guys. Uh, Anchor VWAP support sometimes works, sometimes doesn't work, guys. So in case if you want to enter short position, you could have placed your anchor VWAP just here. After seeing this kind of breakdown of this candle, you could have entered short position also. But you can see this 0.38 level, price facing some sort of rejection. You can see the market trying to move higher, taking retracement, and again further breaking towards the upside. And in case if the market found some kind of support here, the market would have continued further buying towards the upside, and the price would have reached all the way to this order block level. This is the 1 minute order block. So the price could have reached all the way to this order block level, guys. But you can see the market here found some kind of support, retraced back, and here the same pattern is repeated, guys. You can see the market came here, retraced back, and again broke. But here it couldn't make a higher high and continued further selling towards the downside. After this kind of engulfing pattern of this bullish momentum, you could have entered short position. And looking at this 0.38 level, where the market is facing some sort of rejection, you could have entered. And you can see another price rejection candle, this kind of dodgy candle, clearly indicating some sort of bearishness. So if you try to plot the common point between this fib extension levels, the common point between this to the common point between this, you can see the market also didn't come all the way to 100% move. So usually when we try to plot the fib extension levels, there is high probability the market might come all the way to this 100% move here. But here the market didn't actually move, guys, 100% move. So in case if you try to plot this fib retracement, the compound within this to the compound within this, it couldn't also reach the 1.68 level. It's better you could have exited at the 0.5 as well as 0.6 level, guys. Or looking at this kind of pivot, there might be some kind of support over here. So you can see this kind of order block level also, guys, here. In case if you really, you can see the market clearly broke this high and with a fair value gap here, and the market, there was another liquidity over here. So in case if you might have seen some sort of demand over here, you could have exited your long position. But let's stick on to our rules, guys. So the common point between this to the common point between this to the common point between this, you could have exited around the 0.5 as well as the 0.6 level. Or you can see if the market is kind of consolidating from here. And once if this 200 moving average, 20 moving average broken towards upside, you could have exited your long position, short position. So this is the 0.5 as well as 0.6 level. You could have targeted here. So you can see how the market taking support from this 0.5 as well as the 0.6 level here. Usually this is a profit booking zone, guys. You can see after this kind of huge momentum, a lot of sellers might have booked their profits here. And you can see clearly the market is trying to head bullish only. And here there is another order block. If you consider this high to this swing, guys, the high to this low over here, you can see the market came all the way to the 550, but couldn't break this low, guys. You can see the market retraced here again, continued further selling towards the downside. And you can see this kind of channel pattern also, which indicates some sort of bullishness where the price would easily be broken towards the upside. And you can see here this kind of demand over here, which actually broke structure towards the upside, guys. So there is no clear price action, by the way. But what we can see here is that here there is some break of structure towards the upside. And you can mark this demand, guys, which actually broke structure towards the upside. You can consider this is some sort of demand with no fair value gaps or no order blocks. But if you try to plot the anchor wave up level towards this swing low, where there is a break of structure, you can see the market here took support from this 350 levels, guys. If you try to plot this demand, this is engulfing pattern. You can see after facing price rejection from this 200 moving average as well as the anchor wave up level over here, or in case if you can consider only the 200 moving average, the market continued further but couldn't even break this and immediately followed by another bullish engulfing pattern, clearly indicating some sort of demand at this zone. And you can see if you try to plot these levels over here, the count point between this to the count point, high to bit, the blue zone to blue candle, you can see this is a kind of support over here. This is the 550 level. And you can see the market is forming some kind of support here. So in case if you might have entered long position, you could have entered here. And targets, you could have drawn the fib extension levels, the count point between this to the count point to the count point between this. You could have targeted all the way to 1.68 level, guys. This is how you could have targeted the 1.68 level and keeping your stop loss just below this 350 level, guys. I hope you're getting what I'm saying, guys. You can see this impulsive momentum, the market faced some sort of rejection from 350 level. And after this kind of rejection, guys, in case of the market sentiment would have been clearly bearish, that you could have expected a huge bearish candles forming with fair value gaps. But here you can see this kind of momentum towards the downside, where it shows some kind of liquidity pattern here, clearly indicating some sort of bullishness, guys. Even this kind of impulsive move towards the downside is not strong, indicating some strength here, guys. You can see this momentum with huge candles, but this kind of retracement, you can see there is a lot of consolidation. And again, the market again trying to take support from this level only. You can see here, this is the demand over here. There is some sort of demand. Again, from this demand zone, the market clearly rallied all the way, couldn't cross this 200 moving average, again rejected price from here. So in case if the market sentiment would have been again bearish, the market would have continued further selling towards the downside, even breaking this lows, guys, this swing lows. But here you can see after this huge bearish candle, a lot of sellers might have entered, continuing expecting the market to go further towards the downside. But here you can see after this kind of bearish candle, the market followed by another same size bullish engulfing candle and continuing further towards the upside. And if you try to plot the anchor way up level here, you can see price taking support over here, and you could have targeted all the way to 1.68 level. Uh, this is or the order block level. You can see this is the order block level. So in case if you might have considered, you could have exited at the order block level as well. And you can see after this, the market clearly showed some kind of pattern, guys. But again, the market came here. You can see the market again took support here, couldn't make a higher high. Again, formed a chalk over here, guys. You can see here clearly the market broke here towards the downside, clearly indicating some sort of bearishness. But what I need to say is that you can see this kind of demand, which actually broke the structure towards the upside. You can consider this to be an breakout structure with a fair value gap. So if you consider the last down candle before the up move, you can consider this candle as this is the last down candle before the up move, and this is the 1 minute order block. And this 1 minute order block is with a fair value gap over here. So if you consider this zone over here, which is a fair value gap, you can see, guys, here the market was not, this fair value gap was not been mitigated. This 1 minute order block, which showed some kind of support over here. So you can see even after this kind of huge momentum, when the market formed some sort of chop, the market showed some sort of demand here. You can see price rejecting from these levels and the fair value gap over here. You could have entered a long position just below this position, guys. Here, keeping your stop loss just below this candle and targeting all the way to this high. Or if you try to plot the fib extinction levels, in case if you want to draw the count point between this to the count point between this to the count point between this, you can see the market couldn't even make a higher high also, right? This is 100% move. You could have targeted this swing high structures because you can see the market came thrice to this level and couldn't close. You can see some sort of rejection also. In case if you want to hold this trade, guys, you can see the market here broke this high, consol took support here, again broke, again took support, again trying to break here, guys. So in case after this kind of consolidation, you can spot the last down candle. You can consider this long candle. If this candle is being broken towards the downside, you could have just exited your long position, expecting that the market might continue further sell towards the downside. In case if the market sentiment would have been bullish now, guys, after this kind of support, the market might retrace to somewhere these levels and continue further bullish like this. But here you can see the market even changed this and break towards the downside. Here you can see this kind of candle which even broke towards the downside, clearly indicating bearishness only. So you could have tried your stop loss just to this level, so you could have made a decent amount of profit till this swing here. This is the order block level where it formed support. Once if the order block level has been mitigated, it doesn't hold any value, guys. So you can see once this level has been broken, you could have just taken short entry here itself. So, or in case if you wanna see if you could have plot the fib levels, the count point between this. Once this level has been broken, you could have entered short trade here itself, guys, clearly indicating some sort of bearishness only. But here, what we can see is that the market formed chalk over here. This is the chalk here. So the last up candle before the down move, the count point between this to the count point between this, you can see this 0.38 level over here, guys. This is a 0.38 level over here. You can see the market here face some sort of rejection even after this kind of support over here, the 200 moving average as well as the anchor way up level here, which showed some kind of significance here. Here also they might show with a strong support, but here it couldn't cross this 0.38 level, guys, clearly indicating some sort of bearishness. In case if you might have entered long position, you could have kept your stop loss just here. So in case if the market retraces and continues further towards the buy side. But here you can see the market here also the same way as after this huge momentum candle, the market broke towards the downside. Here also the same pattern has happened after this huge momentum candle. The market clearly broke towards the downside. So once if this level has been broken, you can see this kind of trendline liquidity over here. This kind of pattern, guys, after this break of structure here, the market here clearly broke towards the downside. And you can consider this, you could have entered somewhere here only, guys. Your long position, short positions here, keeping your stop loss just above this candle itself and targeting all the way to this downside. You can see there was a lot of consolidation happening here, but what we can consider here is that you could have just entered short position here itself, guys, somewhere when this level has been broken, this kind of pattern forming, clearly showing some kind of liquidity. You could have kept your stop loss here and continued all the way towards the downside. So in case if you try to plot the fib extinction levels, the count point between this to the count point between this to the count point between this, You could have targeted all the way to, look at this guys, the 2.6861 level. But or you could have targeted towards the pivot levels, guys. I think pivot level support stands strong, so you could have targeted till the pivot levels. But in case if you might have missed out on this trade, guys, in case you can see here the market after this kind of rejection from this 200 moving average, after this kind of bullish momentum, the market clearly broke towards the downside, forming another breakout structure. So in case if you try to plot the order block level here, this is the 1 minute order block, the last up move, which broke structure towards the downside. So when the market retraced and formed some kind of rejection candles from this 200 moving average, you could have entered short position somewhere here, keeping your stop loss just above that candle and targeting all the way towards the downside. So in case if you try to plot the Fib extinction levels, the compound between this to the compound between this to the compound between this, you could have targeted the 1.68 level, guys. You can see how the market here reached all the way to 1.68 level. This is your target, guys. This is how you could have taken another trade in case if you missed out. There wasn't a proper price action happening here, but with a lot of experience, also you can trade even this kind of momentums, guys. Expect keeping your stop loss minimum and targeting huge profits over here. You can see this, guys, 1, 2, 3, 4, and this candle I have told you. This I have told you, guys, price rejecting, so you could have taken short position here, keeping your stop loss just above that candle and targeting all the way to this 100% move. But this didn't happen. You could have exited somewhere here, and this momentum also you could have captured once this support has been broken. This is quite surprising. This momentum, guys, usually only with a lot of experience and with a lot of conviction, only people can take some sort of trades after this kind of engulfing pattern. Clearly, the market is trapping buyers. So in case if you could have even taken this short position after this kind of engulfing, keeping your stop loss above this trade only and targeting all the way to 0.38 level as well. So this is about my trade analysis, guys. So one momentum over here, you can see how the market has behaved. This is the order block level. This is the anchor VWAP support as well as the 350 support. This is the 1 minute order block. Let's take this out in case there wasn't a pure price action over here. And this is about Nifty, Bank Nifty, guys. You can see 1, 2, 3, 4, 5, 6 beautiful trade setups where you could have taken with a small risk to reward ratios. This is about Bank Nifty. Let's come into Nifty 50 trade analysis. In Nifty 50, you can see, guys, the market here consolidating here. And you can see when this candle over here clearly broke the VWAP level, day VWAP level, as well as the 9 as well as 21 moving average, you could have just entered during this trade itself by keeping your stop loss just below that candle. In case if you ask why you want to enter this candle, you can see a lot of time the market is consolidating in a sideways manner, guys. So there is a high chance that the market might face rejection from this level and rejection from this level and continue further towards the downside. But what happened is that the market rallied towards the upside, targeting all those sellers who might have entered here, expecting the market might go towards the downside as like yesterday, how the market behaved. The market consolidated sideways and broke towards the downside. But here the market trapped yesterday's momentum, sellers who might have sold yesterday. But you can see that this kind of price action when you can see after this kind of huge momentum, the market tracked all those sellers by this kind of impulsive momentum towards the upside. So in case if you want to draw this swing high to this swing up over here, you can see price consolidating at this 0.5 as well as 0.6 range over here. This is a 50 level over here. Or in case after this kind of huge momentum, guys, in case if the market sentiment would have been bearish, the market would have clearly broke this low. But you can see this first candle's low has not was not also broken towards the downside, clearly trapping buyers, sellers over here. And there is a lot of conviction why you should take this trade, guys. Uh, so for the targets over here, in case if you try to plot the common point between this to the common point between this to the common point between this, you can see the market came all the way to 4.26 level. This is the 4.26 level, guys. You can see how did I plot this fib extinction levels. You can see this kind of momentum, guys. This momentum and price took support over here. So the common point between this to the common point between this is the common point, guys. And for this is the common point. So in case if you target this, you can see the market came all the way to 4.26 level. Or or after this kind of momentum, guys, you can see a bullish momentum which broke this high, the market retraced again, formed some kind of higher high, again retraced, again formed higher high. So in case if you might have tried your stop losses, you could have tried all the way to this level, guys. So in this momentum towards the upside, you could have tried all the way. In case if the market breaks this low, you could have just exited your long positions. And you can see the market face some sort of rejection and kind of broke structure towards the downside as well, forming a chalk over here. You can see this momentum, guys, with impulsive momentum here. It forms some sort of chalk here. So in case if you try to plot the anchor wave up levels here, the last up move candle, you can see the price rejecting here, the price rejecting over here. You can see here it formed another chalk over here. Can expect this to form another breakout structure. So if you consider the last up candle, you can consider this is the last up candle before it broke towards the downside. You can consider that to be a 1 minute order block. You can see how the market retraced all the way to 1 minute order block, faced some sort of rejection. So in case if you might have entered short position, you could have kept the count point between this to the count point between this to the count point between this. You could have targeted all the way to this 100% move over here, guys. This is where you could have targeted your position. So short position here, keeping your stop loss just above that candle and targeting all the way to 100% move. So this is how you could have traded, guys. This is how you could have traded short position. This is a quick scalp where you could have taken short position. And you can see even after this kind of impulsive momentum, you could have considered the last up candle before the down move. So the last up candle before the down move, you can see the price rejecting from 0.38 level. So in case if you try to plot the Fib extinction levels, the count point in this to the count point in this to the count point in this, you can see this 0.5 as well as 0.6 level forming some sort of support over here, indicating some sort of demand over here. This happened same in Bank Nifty as well. You can see after this kind of impulsive momentum, the market retraced and again took support from this zone. Here also you can see there is some sort of demand. Again, the market retraced, faced rejection from 21 moving average and continued further selling towards the downside. There is usually some kind of significance, guys, whenever we plot some kind of zones here. And you could have considered this zone also over here. And even consider this order block level as well to target, because you can see this is a 1 minute order block. So you can consider this 1 minute order block, which has been mitigated here. So let's take this anchor wave level out. You can see clearly, guys, after this 0.5 level, the market clearly broke towards the upside, clearly forming some sort of chalk over here. This is the chalk here. So the market again retraced back to this level. As I have earlier told you guys, usually when there is market sentiment would have not been very bullish. You can see there is a fair value gap over here. You can see the market came to this liquidity and formed a bullish engulfing pattern over here, clearly engulfing the previous two candles, clearly indicating some sort of bullishness, and this fair value gap has been mitigated. So in case if you enter long position, the compound in this to the compound in this to the compound in this, you could have targeted to the 100% move or this order block level, guys. You can see this is the last up candle which actually broke structure towards the downside. So this order block level you could have targeted and exited your long positions, and you could have trialed all the way here, or you could have, after this kind of huge momentum, you could have kept your stop loss here or midway between this. That's how you could have taken this trade, guys. So our my my job here is to give you a right entries, guys, where exactly you could have taken this entry. This is the fair value gap over here, where the market came, took this fair value gap. And you can see after this kind of momentum, you can see some kind of reaction, guys. There is some kind of demand. And this demand also is showing some kind of significance here. Previously engulfing two candles and showing some kind of bullish momentum. Or in case, guys, in case if you try to plot the retracement levels, the common point between this to the common point between this, usually there is high chance that the market might take support from 0.23 levels. If you go and watch my previous video, I showed you there is high chance the market might take of this fib of this impulsive momentum. When you plot the retracement, there is high chance the market might take support from this 2.6 to 0.23 level. So you can see how the market here took support from 0.23 level and continued further bullish towards the upside. Or you could have entered somewhere, exited somewhere after this kind of momentum. After this kind of huge impulsive momentum, also you could have drawn the fib levels here. So in case if the market breaking this level also, you could have exited, or below this level also you could have exited, guys. It's based on your risk to reward ratio. And you can see here the market clearly broke structure towards the upside, forming a break of structure here. So in case if you try to plot the low to the common point within here, you can see price taking support from this 550 levels over here. This is the 550 level where price is trying to take support, and you can see, and if you try to plot these levels, guys, the anchor wave up level over here, you can see this price is trying to take support here, this anchor wave up level where price is forming some sort of support. And if you try to plot this high also here, guys, the last up candle, this candle, guys, the last up candle before the down move, you can see, guys, this kind of confluence where even the high of this candle also is showing some kind of support over here. The anchor wave up level also is showing some kind of dip, and this is a 550 level. You can see there is a lot of some confluence here where the market broke here, consolidated. Even after this kind of bearish candle, it formed another bullish engulfing candle, clearly indicating some sort of demand. So in case if you might have entered this position after this bullish engulfing candle, keeping your stop loss just below, and in case if you draw the fib extension levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move over here. But here there is no proper retracement. You can consider this way. You could have just entered here, keeping your stop loss just below that candle, and you can see clearly the market broke this high, guys, forming a chalk over here, chalk over here, and the market retraced, took support from this 21 moving average. So in case if you try to plot the fib levels here, the common point, the high of this level to the high of that candle, you could see price taking support from this 550 levels over here. This is a 550 level where the price is trying to shake. So you could have entered another long position here, keeping your stop loss just below this 200 moving average, somewhere between this two. And if you try to plot the fib extension levels, the common point between this, the high between this to the high and the low between this, because the swings are black, this whole swing also is black here, this swing also is black, so you could have targeted all the way to 1.68 level, guys. This is the 0 trade where you could have taken in Sensex, because both Sensex and Nifty both moves in almost same direction. You can see, guys, how you could have traded this position, added to your trades, as well as taken long position after seeing this kind of huge bullish engulfing pattern over here, clearly indicating some sort of bullishness. And here you can see again the market found came all the way to this dimension and formed another bullish engulfing pattern over here. You could have entered here also, guys, keeping your stop loss just below this candle as well and targeting all the way to this swing high. Or you could have exited anywhere between this zone, guys, seeing this kind of liquidity, which clearly indicates some sort of bearishness. This kind of pattern clearly indicates some sort of bearishness, guys. We should see huge impulsive momentum with fair value gaps and with small retracement. Only then we can consider the market to be sentimentally bullish. You could have just kept your stop loss just below this candle itself, guys, and that's how you could have entered. But you can see after there, the market clearly broke here, forming a chalk over here. And if you consider the last up candle before the down move, you can consider this to be a 1 minute order block where the market came all the way and faced rejection over here. So if you try to plot the anchor view up level here, you can see the market facing some sort of rejection here. And clearly from here, the market broke all the way, all these levels, clearly indicating some sort of bearishness. So let's take all these levels out, clearly indicating bearishness. You can see a market of this impulsive momentum. If you consider this swing high to this common point in this, you can see the market face some sort of rejections from this 0.5 to 50 levels over here, and price was not able to cross. And here you can see another trendline liquidity clearly indicating bearishness, broke towards the downside, guys. So after this clear break of this level towards the downside here, clear break of structure towards the downside, you could have entered your long positions here, short positions here, keeping your stop loss just below this 200 moving average and targeted all the way this low, guys. So in case if you see, whenever you can see this kind of pattern also, guys, whenever there is some sort of bearishness and this slope, guys, this kind of slope, whenever you see there is, I have seen it many times, it indicates clear bearishness, guys. You can see this kind of slope here happening. Or let's look at price action really, guys. You can see this is the last up candle which actually broke structure towards the downside. So if you try to plot the high of this candle to the low of this, you can see the price faced some rejection from this 550 level over here. This is the 550. This is the 550 level. So the market retraced back to 550 level with some kind of huge momentum. But after this kind of huge candle where price is rejecting, you could have entered short position here, keeping your stop loss just above that candle itself and targeting, in case if you draw the fib extinction levels, the high of this candle to the low of this candle to the high of that candle. You could have targeted all the way to 1.68 level here. We could have targeted this as your first target, and you could have targeted all the way to this level also, guys. You can see how the market came all the way to 4.26 level also. Look at this, guys. Or you could have exited somewhere here or this level. So you can see all the way to 4.26 level. This is how you could have traded, guys. You can see again the market after you could have entered another short position, guys. You can see this kind of huge momentum where the market even broke this low here, formed another breakout structure over here. And if you try to plot the fib levels, the common point within this to the common point within this, you can see the market here face some sort of rejection from 550 level. This is the 550 level, and what you can expect here is that after this huge bullish momentum, guys, the price halted at this 21 moving average and formed a doji, and this piercing candle of this bullish momentum, you could have entered short position during this candle and keeping your stop loss over that candle itself and targeting all the way to this low, guys, the 4.26 level. Or you could have exited because today was expiry. You could have waited till the day end. Look at this, guys, how to add on to your trade. This is, I've showed how to add on to your winning trades. Here also I've showed how to add on to your winning trades. How this 21 moving average acted as a strong resistance after this kind of huge momentum where price took support from the 0.5 as well as the 0.6 level over here, which indicates some sort of demand over here, fresh rejection over here, and formed a piercing pattern over here, keeping your stop loss just above that candle and targeting all the way towards the downside. This is about my Bank Nifty trade analysis, guys. You can see adding on to your winning trades, adding on to your winning trades, bullish engulfing pattern, price taking support from fair value gap as well as 0.38 level, and targeting the 100 or 1.68 levels. The anchor VWAP level, if you try to plot the anchor VWAP level here, price price rejecting from these levels, the 1 minute order block level as well as the anchor VWAP level, clearly indicating some sort of bearishness. And you could have targeted all the way to this 1 minute order block, guys. This is the, you can see this momentum. This is 1 minute order block. You could have targeted all the way to 1 minute order block or the 100% move over here. This is about my Nifty 50 trade analysis, guys. In case, um, and what else do I need to show? You can see this kind of momentum, guys. Actually, I have taken trade at around 93. You can see how the momentum went here. You can see price consolidating a lot of time and face rejection from 200 moving average, again retraced back. This kind of momentum, guys, is this momentum which I have previously told. This kind of this momentum towards the upside where the market again took support, face rejection from here. The same candle is this happening. You can see this bullish engulfing pattern of previous candle. You could have entered here only, guys, and you could have targeted not to wait till this piercing candle forming. This kind of candle forming only you could have entered and kept your stop loss just below. And you can see from all the way to 100 to 200, guys, a 100x move with a very minimum risk to reward ratio. That was about Sensex expiring, and that's it, guys. I hope you're finding some value in what I'm teaching. In case if you really like the knowledge I'm trying to share over here, please leave a comment below, guys. Like, share, and subscribe, and please share with your friends and family if you find it valuable. Even let your family as well as your friends learn. Um, and keep supporting my channel, guys. Thank you.